Okay, today we'll be covering the chapter Provision for Doubtful Debt. Okay. Provision for doubtful debt. Why we provide for provision for doubtful debt is because of the prudence concept. Okay, it is an important concept in accounting, the prudence concept. Prudence concept tells us that we have to anticipate losses rather than profits. Okay, you should know about it, prudence concept. It is a recurrent question in exam concerning prudence concept in multiple choice and also in paper 2 about the prudence concept. Explain what is prudence concept. It is where we anticipate, it is a requirement that we anticipate losses rather than profits. That's why we provide a provision account for doubtful debt. That debt that we doubt that will become bad. Okay, we are doubting. They are not bad yet, but we are doubting that these debts may become bad. Okay, so we have to provide provision for doubtful debt. And it is usually maintained a percentage of provision each year. Okay, we have to maintain a certain of percentage each year. Okay. Now, what are the accounting entries? What are the double entries when we are going to create a provision for doubtful debt? Okay, we have to, it is in terms of money types. Okay, provision should be in terms of money, in terms of dollars, in terms of rupees, okay, in money type. So what is a double entry for that? Okay, we debit the income statement with the amount of the provision. Debit income statement is that part where it is under less expenses section, under as expenses, a debit income statement, and we credit the provision for doubtful debts account. This is a double entry when we create a provision for doubtful debt. Now, the total provision, okay, the total provision that we have credited goes also in the statement of financial position, which is commonly known as balance sheet. Okay, the total provision is deducted from trade receivables in the statement of financial position. Okay, we have two entries. Okay, one is a double entry, and second, it goes into the statement of financial position. It's deducted from trade receivables. Okay, that's for creation. That is, we are creating provision for the first time. Okay, now another entries or adjustment to the provision account. Because if we have created the provision for first year, so the next year, there should be an opening balance of the provision. Okay, we have to adjust it each year. For example, okay, I'm giving an example to do this exercise. If opening provision for doubtful debt, okay, is $500 and trade receivables $20,000, and we are required to maintain 2% of the provision, okay, 2% provision each year. So how we are going to work out this exercise? Step number 1, you calculate the new provision. Okay, we calculate the new provision, which is 2% times 20,000. 20,000 is a trade receivables, which will get $400. Okay, this is my new provision. Step number 2, you do the difference. Okay, step number 2, we do the difference between the opening and the closing provision. If you remember, the opening is $500 and now the new provision is 400. Okay, so it has decreased. Okay, 500 in 400. 500 comes to 400. So it is a decrease of $100. It is a decrease of provision of $100. It is a double entry here. Debit the provision account and we credit the income statement. When there's a decrease in provision, it is regarded as like a gain, okay? Because provision is for losses, okay? Provision for doubtful debt is regarded as a loss. When there's a decrease in the loss, so it's regarded as a gain and it is credited to income statement, which is added to gross profit. Okay, gross profit figure, we add the decrease in provision for doubtful debt of 100. It is only the adjustment that is charged to income statement, not the balance figure 400. It is only the adjustment, but decrease in provision of $100 is credited to income statement and we have to reduce our provision account. So we are going to make a debit entry in the provision account, provision for doubtful debt. We are going to debit. If you have to increase a provision, we have to credit a provision account. When we are going to reduce a provision, we debit the provision account. Okay, that's for decrease in provision for doubtful debt and how we calculate the percentage. Now, the final balance. Okay, the final balance, that is a new provision, $400. We are going to deduct from trade receivables in the statement of financial position. The final balance, $400, is deducted from trade receivable in the statement of financial position. Okay, so here is it for adjustment. Okay. Next, we have another example where there is an increase in the provision. Okay, there is already a provision account maintained. There is an opening balance of $300 and trade receivables $20,000. We are going to maintain 2% provision for doubtful debt, and that 2% is calculated on the trade receivables figure. Okay, we calculate the new provision. 2% times 20,000 gives you $400, and you're going to make the difference. 300 opening and 400 the closing. So there's a difference of 100, but it is an increase in the provision of $100. So when there's an increase in provision, so there is an increase in the loss. Okay, increase in the loss means we have to charge the income statement, okay, as expenses. So we debit the income statement under the less expenses section, debit income statement, and we're going to credit the provision account by $100. And finally, when you're going to balance the account, it will give you the balance $400. And this $400, same, will deduct from trade receivables in the statement of financial position. So here it is for provision for doubtful debts. Okay, if you follow these steps, then surely you will be able to tackle any questions for provision for doubtful debt and accounts for these adjustments in the financial statement, which is the income statement and the statement of financial position. Okay, so I thank you for your attention. And if you want more tutorials, in fact, this video will be uploaded on my YouTube channel. So do subscribe, okay, on my YouTube channel. We get more about the videos, the past videos that I have done. Okay, so we stop here.